Yo, what's up? We're the Harlem Globetrotters, and you're watching Taking Stock. Who you with? Who are you with? My brother and my sister.
Dare I say it is time to rock and roll. Welcome one and all to today's broadcast. You are watching Taking Stock. I'm your host, JD Durkin, live on the trading floor of the iconic, and I do mean iconic, trading floor of the New York Stock Exchange at this hour, as we are about a minute 20, let's call it, away from the closing bell. The S&P 500 looking at fractional losses. The Dow Jones Industrial Average up 0.3%. The New York Stock Exchange Composite Index up 0.11, let's call it, and the Russell 2000 expected to finish in the green, 0.3%. Looks like both the Dow and the Russell will barely miss closing in all-time high record territory. In the S&P 500, consumer discretionary, utilities, and industrials, those are your strongest performing sectors for this Wednesday, June 24th. Your S&P laggards include energy stocks, tech stocks, as well as telecom. Over in the Dow, Home Depot, Sherwin-Williams, 3M, far and away the best performing Dow names today, while your Dow laggards into today's closing auction include Disney, Chevron, as well as Verizon. Of course, all eyes in the world of memory and storage chips, focused on Micron, set to report after the bell, down about 2% on the day, but in positive territory, 250% so far year to date. We got the amazing team from DT Midstream, ticker symbol DTM, here at the NYSE, set to do the honors. Time now for the closing bell. And there you have it, your final tale of the tape on this Wednesday, the 24th day of the month of June. That means the year is almost half over, Dean? The year is almost half over. How did that happen? All right, the S&P 500 negative territory, 0.09%. The Dow is up, let's call it 0.4. The New York Stock Exchange Composite Index up about 0.1%. And the small caps, the Russell 2000, enjoying a little bit of gains, fractional gains that is, up 0.4%. The Mag 7 in mixed territory, Amazon shares up fractionally, Microsoft shares in negative territory, about 1.5%. The dollar and the VIX both staying elevated, a continuation of their storylines yesterday's here on the street. Gold and silver plus the oil benchmarks moving lower on the session this afternoon, while the crypto majors, my goodness, what a story these have been, moving lower on the day. Bitcoin trading back below 60,000. Also catching a bid, the major airlines led by American, the home builders led by Hovnanian. We just had them on the show here on Taking Stock last week, and the retail giants led by Macy's. Let's bring in our first guest, who I believe joins us via Zoom. Thanks, Dino. I'm going to take your spot here. Say hello to Mr. Ben Emmons, CIO and founder of FedWatch Advisors. Ben, nice to see you here today. So I need your take on monetary policy from the Fed. I just looked at the CME Group FedWatch tool a short time ago. We're taking off the table interest rate cuts, my friend. Interest rate hikes now firmly on the table. What is your outlook for the Fed?
Hey JG, it's great to be on with you, and thank you very much. I think this rate hike is somewhat mispriced. You know, the oil price is declining. We have actually an economy that's okay, generates some inflation, but it's not anything accelerated. So I think this Fed will stay on hold. I call that like a hawkish hold for some time until the energy shock is sort of tapered off, and then see how the economy goes from there. So I think it's a mispriced probability. I don't really believe that the Federal Reserve will actually start hiking unless inflation start doing something really strange and start accelerating.
It might not do something strange, but it's certainly above the Fed's target. What do you think Kevin Warsh and this new look FOMC does with inflation that remains a bit stubborn, not really going down towards 2% here, Ben?
Yeah, they have to do, of course, acknowledge it, and they have. And there are individual Fed members that are worried about that this is an issue longer term, right? Like the longer it stays above that target, the more people expect inflation to stay much higher than it normally is further out in the future. But I think where Kevin Walsh comes from, his thinking is that although that's true, it doesn't mean that we need to slam the brakes and put the economy into a tailspin just to get inflation back to 2%. And I think what he will follow, kind of like what the president sort of told him when he was sworn in, let it boom, right? Don't stand in the way. I don't think he will sort of follow that, but he acknowledges that if inflation stays high, you cannot really bring this rate that we are right now, say, down to 1%. That's just not really feasible.
How do you think the markets end up trading a Kevin Warsh-led Fed in terms of monetary policy, strengthening of the dollar, or other considerations for investors, Ben?
It's a great question because that's actually what's happening. You know what? One thing I noticed is the moment that Kevin Warsh was sworn in, the market started to turn. Right, we've had a stronger dollar. We had a bit of a move in short-term rates. We had like a bit more volatility and stock market like not so in good shape. And that really does have to do with that under him, the liquidity will be drained further potentially. And just having a view also that the Fed should get out of the market, should not influence the markets anymore as much as it used to do. And that's sort of an adjustment period. But I don't believe, JD, that that will lead to any kind of bear market in the stock market or so, because ultimately, if there is a major crisis in the future, Kevin Walsh himself has said like the Fed will step in with liquidity. So I think markets just have to get used to a Fed not so in the markets anymore, speak a bit less, and that's just an adjustment. So that's why you're seeing the dollar getting stronger.
Ben, I know you brought us stock picks. They include Citigroup, IBM, FedEx. Unfortunately, my friend, I'm out of time today, and that's my fault. Please come back again. We'll talk about those stock picks and much more. Ben Emmons, CIO, founder of FedWatch Advisors. My man, come back on the broadcast anytime. Jeff, we'll head this way. We'll bring our viewers the latest updates on the top analyst calls here on Wall Street. That moved today's tape. First up, Stifel initiating BlackBerry as a buy. They say shares are undervalued despite year-to-date gains, of 130%. They added to dominant partner to silicon leaders like NVIDIA and AMD. Next up, KeyBank upgrading Nucor to overweight. They say buy the dip on a stronger second half outlook for the rest of 2026. Finally, Needham reiterating Reddit as a buy. They call the company unique, their words, not mine, with rare competitive position in the marketplace. We'll take a look at, just one stock that calls the New York Stock Exchange its home, and that's my fault today. We'll take a look at here, Jeff, at shares of Uber up 6% on the day, with gas prices steadily in decline, down more than 50 cents national average in the last month. Uber back above the 50-day moving average. Lyft shares also enjoying a big day. Uber still down about 9% so far this year. Does have an average one-year price target of $105 a share. That's upside potential off these current levels of about 40%. And now BTV's very own Kamika Key sat down with Disney advertising SVP Dana McGraw at Cannes Lion. They discussed how fandom is evolving across media platforms. Take a look.
Hi, I'm Tamika Key, reporting here from the Cannes Lion International Festival of Creativity for BTV and the New York Stock Exchange. And we're delighted to have Dana McGraw, SVP of Data and Measurement Science at Disney Advertising with us. Welcome, Dana.
Thank you. Thank you so much for having me.
So fandom was a major theme at the Disney Upfront. How are you seeing fandom evolve across your platforms?
I mean, listen, really, fandom is about connection, right? We all want to belong somewhere, be connected to something. And so we really see it as multi-platform. So it's really evolved in that fans follow from linear to streaming, even to our social presence. And so the fandom is this deeply engaged, but what's really interesting about it is they're not just deeply engaged with one kind of fandom. So if you have this propensity to be a fan and to be deeply engaged with us, you're deeply engaged with us in a multitude of ways. And I think that's the evolution, and obviously the evolution of kind of data and measurement and being able to see that fandom and kind of follow it across everything that we do.
I mean, when you talk about fandom, we talk about the NBA playoffs in New York. Yes. Go Knicks. So the NBA Finals Game 5 drew 24.5 million viewers, apparently the most watched Finals Game 5 since 1998, according to Nielsen.
That's right.
What does that say about the power of live sports, and how do you measure the full impact across all of those platforms?
I mean, there is nothing like the power of live sports and live events, honestly. And the beauty of it is there's connection to the moment, right? Like that fandom connection, it's the connection to the moment. We know that in that moment, even for brands that are advertising with us in the moment, the attention lasts longer. Like the connection is tighter, the attention is longer, and ultimately that impacts the affinity for everything that you've seen in those moments. But it's not just that live event and live moment. It's the before, it's the during, it's the after. I mean, if you're a Knicks fan, how many clips did you watch of the game after the actual live event because you wanted to relive the connection, right? And so for us, it is like the jumping off point of all of the reach, that we have across our platforms. But those live events are like the ultimate point of connection to just drive reach and really to tie us together, right? Which is kind of what we're all trying to do.
Drilling down a little bit more into the data, Generation Stream is a year-long quarterly study of trends occurring in our industry presented by Disney Advertising.
Yep.
Past editions have looked at streaming in general, sports streaming, family streaming, and global streaming.
Right.
So the upcoming edition of Generation Stream highlights the rise of eventized viewing and what you're calling the main event effect.
Yes.
Can you tell us a little bit more about what that is?
Yes, I'm super excited about it. So obviously it's the 5th edition, so there's been 4 prior editions of Generation Stream. And really this one came out of, the last edition was the global edition, where we kind of just looked in multiple markets and found similarities and differences in how people engage and stream. And it's not just how they stream with us, it's how they stream in general, regardless of who, the publisher, the provider, the content is from. And part of what we started to see was, again, it goes back to connection, right? People want to belong to something and be together and experience things with other people. And so we started to notice in that research, independent of the market, how people were watching streaming together or maybe alone, but making an event out of like, oh, my show's coming on, I'm gonna have this food, I'm gonna do this thing, and I can't wait to watch it. The year of events for us is incredible. So we really thought we wanna take that and do a year-long study and kind of every quarter release a little bit of what we're seeing, but wrapped around those events. So we wanted to understand really how people make an event out of streaming, whether it's live or otherwise, and what that looks like. It's going to be, or is, because we finished the first quarter, across 11 markets, so that we can really understand, again, similarities and differences as we look globally in all the markets, obviously, where we provide a service. So it's really interesting what we have learned already in this first quarter. And the thing that struck me and is really powerful, on the theme of fandom and connection is people see streaming now as kind of a social network. And so they feel like they're connected to people, even people they might not know. So part of the event could be just knowing all these other people are watching this moment as well, and then connecting on social or whatever that might be. And so kind of those themes are really popping up, and sort of the theme of local cultures being global. And so what that looks like in a streaming environment and how that creates events for people however they want to make it happen.
Definitely seems like an exciting time at Disney Advertising.
Yes, 100%. We're super excited.
Welcome back to the show. Our second guest of this afternoon's broadcast joins us live from the trading floor of the big board. Say hello to Jeff Walton, Chief Risk Officer of Strive, among many other things, a Bitcoin treasury company. Nice to have you here.
Thanks for having me. Appreciate it.
Bitcoin pullback. I talked about it at the top of the broadcast. Every time I look, it's hovering around 60, 61. Today it's under 60,000, excuse me. Healthy reset, something deeper going on here?
Yeah, I think the fundamentals are still really strong. We're looking at underwriting Bitcoin to a long-term compound annual growth rate. Right now, today, Bitcoin is a few points under the 200-week moving average. Historically, when Bitcoin's under the 200-week moving average, that's a really good time to think about accumulating as much as you can.
So I'm going to take this in a bit of a different direction because I saw this on Twitter earlier today. This comes from Dave Portnoy of Barstool Sports. He said, tell me why all the people who have always said Bitcoin is a scam and going to zero are wrong, because it seems like it's going to zero. When people have those concerns, those sorts of questions, what is your response more broadly?
Yeah, really, Bitcoin is capital. What is capital? Capital has a very loose definition. I've operated in the capital markets for the last 11 years. My past life, I was a reinsurance broker and worked with managing volatility of insurance company balance sheets. So what we're doing is we're looking at managing the volatility of our balance sheet and managing the Bitcoin and how it's moving into the future. So really, I think the fundamental thing that people miss is Bitcoin is capital, and that capital can be used in many different ways, whether that be yield generation strategies or parked as collateral, and that market is continuing to evolve.
Bitcoin is increasingly discussed along things like gold, bonds, and currencies. What are you seeing in terms of increased institutional adoption, and overall is Bitcoin being treated like much more of a legitimate macro asset class?
I think institutional adoption is still a little bit slow, right? There's a lot of volatility with the underlying instrument. As we can see, it's down 55% from all-time highs. But institutionally, the Basel risk framework, there's a 1,250% risk weighting on Bitcoin, meaning banks and insurance companies can't even hold the instrument. There's no interest in leveraging against the balance sheet. So as the market continues to evolve and the rules and regulations continue to improve, that should influence more institutional adoption. In the meantime, we are creating and designing securities for corporations and institutions to get exposure to the instrument within a lower volatility type wrapper.
I want to ask you about your new product. How do you pronounce it?
SATA. Yeah.
SATA, pardon me. Most income products, of course, pay monthly, they pay quarterly. SATA, you're trying to go about doing it a little bit differently. How does it pay dividend every business day? What should people know here?
Yeah, we are the first company, and this is the first security in capital markets history to pay a daily dividend. Most companies that, or the companies that pay a monthly dividend, there's only 2% of corporations that pay dividend monthly, and we're now paying it daily. We're able to do this because we have Bitcoin on our balance sheet. We have the assets already on our balance sheet, and we are underwriting that payment into the future. So we are underwriting a long-term compound annual growth rate of our balance sheet, and we're carving off some risk return of the senior security on our balance sheet and giving that back to the senior holders.
Between Bitcoin adoption, tokenization, the general conversation about stablecoin, where does all this go from here, you think?
Yeah, I think this continues to evolve, right? The instrument that we've created and strategies created, so our instrument SATA, strategies Stretch, these are less than a year old. You can't make a baby in 9 months, right? So this is going to evolve as clarity provides a little bit more regulatory clarity on the asset and the industry. Institutions will begin to think about how to utilize this asset, how to use it as capital and use it as collateral in the future.
I got about 30 seconds left. What is Strive's thesis that maybe the rest of Wall Street isn't quite getting right now?
Our thesis is the debt problem in America is very difficult to solve, and the U.S. debt to GDP is compounding at 3 to 4% annually. The U.S. monetary debasement is at 6.7% over the last 50 years in a row, and our goal is to plug that problem within financial markets.
Jeff Walton, Chief Risk Officer of Strive, my man. Thanks a lot for being here.
Thanks for having me.
Don't go anywhere. A lot more Taking Stock coming up live from the big board right after this. Welcome back. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence for your Wednesday afternoon. At this hour, as we were just mentioning with our guest a moment ago, the crypto majors all down at this hour, about 3% each. Next up, Meta entering the prediction markets race with reports the company is building a platform called Arena to compete for users currently flocking to services like Kalshi as well as Polymarket. And finally, at this hour, Qualcomm set to acquire AI software company Modular. It's a $3.9 billion stock deal, bolstering the company's push into data centers and expanding its challenge to NVIDIA in the race for AI-led infrastructure. In part one of this episode of NYC Innovates, Cheddar's very own Chris Castellino explains the history of the New York City skyline tourism industry. Take a look.
The New York City skyline, home to some of the tallest buildings in the Western Hemisphere. Views that generated $85 billion in tourism economic impact in 2025 alone. Empire State Building, Top of the Rock, Summit One Vanderbilt, One World Observatory, Edge NYC. These observation decks used to be simple. You paid, you went up, you looked through coin-operated binoculars, and then left. But today, the race to the top has never been more competitive.
This is art, this is an observation deck, this is a culinary experience. I think this is a form of entertainment.
In this episode of NYC Innovates, we're taking a trip 1,100 feet in the sky, exploring the growth of the city's most popular observation decks. We'll discover why Hudson Yards just invested millions of dollars to reimagine New York's most photographed views, and find out if these immersive new experiences are more than just a social media opportunity.
You just see the reaction from people coming off the elevator. It's this like wow moment.
Stay with us. Long before New York was selling skyline views at $40 a ticket, the idea of paying to go up was born across the Atlantic. The concept of the observation deck as a tourist attraction can be traced back to a French engineer named Gustave Eiffel. When he built the Eiffel Tower for the 1889 World's Fair in Paris, he combined cutting-edge elevator technology with lofty viewing platforms. When it opened, 2 million people showed up in the first 6 months, creating an architectural icon designed to generate revenue through public admission. Just 1 year later, New York City brought that idea home, embedding it into the city's own skyline. The World Building on Park Row was built with the observation deck intentionally designed within the structure. When it was completed in 1890, this 309-foot tower was not only the tallest building in New York, but also the tallest office building in the world. Its observation deck served as a massive public draw, offering unobstructed panoramic city views for 5 cents. Then came the skyscraper that changed everything. In 1931, the Empire State Building opened, an architectural flex in the depths of the Great Depression. New Yorkers called it the Empty State Building because the offices all sat vacant. But the cramped observation deck was a success. What nobody predicted was that the view would turn out to be worth more than the address itself. Today, the observation decks on the 86th and 102nd floors draw nearly 3 million visitors a year, generating $136 million in annual revenue. Top of the Rock opened just 2 years later in 1933, drawing 1,300 visitors a day. The Twin Towers added a deck in 1975, but following the tragedy of 9/11, it took 14 years for New York to reclaim a view from downtown, when One World Observatory finally opened in 2015. Then, as a new generation of visitors arrived with smartphones in hand and Instagram feeds to fill, the industry couldn't build fast enough. Edge at 30 Hudson Yards in 2020, Summit One Vanderbilt in 2021. 3 major decks in 6 years. Today, the observation deck industry has gone from novelty to full-blown competition. The view is no longer enough. These experiences now feature theatrical elevator rides, immersive art installations, photo moments, bars, restaurants, and merchandising. And this year marks the next chapter in that evolution.
Welcome back to the show. Yeah, look at this shot outside the big board. Time now for the latest headlines in the world of startups, raises, and rounds. At this hour, Superhuman acquiring AI detection startup GPT-0. It comes as demand surges for tools that can accurately identify AI-generated content. Next up, sports prediction market startup Onyx Odds. They are raising $20 million at a $220 million valuation. It's a round led by Kraken parent company Payword. And finally, blockchain data startup Cambrian raising a $6 million seed round as it builds a data network designed to help institutions better allocate capital on chain. And now Scarlett Sieber, the one and only from Money 2020, is back with a new edition of Hindsight 2020. That's where she breaks down key dates in financial history. Take a look.
Welcome back. I am Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind back only a decade this time, back to June 23rd, 2016. The UK votes to leave the European Union, enter Brexit. Let's just say the markets react instantly. It was a big thing. The pound drops, stocks swing, volatility spikes. But the real impact isn't the vote itself. It's the uncertainty that follows. What Brexit shows us is something fundamental about finance. Markets can price bad news. They struggle to price the unknown rules, though. So for years after the vote, companies delay decisions, banks restructure, capital reroutes to other places, not because outcomes are clear, but because they aren't. Fast forward to today, and that lesson, it's still playing out in front of us right now. Whenever trade rules, regulatory regimes, or market access becomes unclear, the capital around it, well, it hesitates. June 2016 wasn't about borders, it was about predictability. That is hindsight 2020, because in finance, uncertainty is often more expensive than bad news. And with that, back over to you.
Look at all my favorite people are here. Welcome back to the show. A little bit of breaking news. After hours, shares of Micron in positive territory after their earnings beat, topping analyst expectations for the third quarter. MU shares are up about 11% in just the last few minutes, a huge boost for the overall chip sector. We'll bring you much more on what you need to know on Micron and the broader semiconductor space on tomorrow's show. Speaking of tomorrow, in the morning, the latest results from BlackBerry plus Darden Restaurants. That's the parent company of Ruth's Chris, Yard House, and Olive Garden, because when you're here, your family. Thanks for watching today's edition of Taking Stock. Have a great Wednesday night. We'll see you again tomorrow.